Hey everybody, Chuck Barone. Friday, May the 12th, 2023. Wrapping up a wild and crazy week this week on Wall Street, in our economy, in our country, man. Wow. Wild times, guys. As always, though, we want to welcome you guys to the show. Thank you guys for your support, watching the videos, and all you do. We appreciate you guys. We do. Every day you guys are with us. We appreciate that. Okay, so let's look at these markets today. A big nothing burger today, pretty much across the board. Nothing really happening. Markets digesting a lot of news, a lot of mixed signals being sent. An interesting report today from the University of Michigan on consumer sentiment. We'll go over that in detail. So the market's just really having no real direction, drifting. So there's moving basically on that day's news and data, and if there really isn't much to move the markets, nothing happens like today. So the markets today, Dow Jones down 8 points, 33,300 on that index. S&P down 6 points, 4,124 on that index. The NASDAQ down 43, 12,284. Not much. The bond market, on the other hand, not a lot today, but still an interesting day because yields have been trending down, and now today, to close out the week, let's have yields go back up, so bonds selling off. The 10-year up 6 basis points to 3.46%. The 2-year jumps 8 basis points, 3.99%. So the bond market moving just the opposite way as it has been moving. I think the bond market more confused even than the stock market. The dollar today rallies. I think that these higher yields, I guess they're figuring maybe another rate cut possible. Speculation, dollar moves up a little bit, nothing dramatic, but still strongly into the 102s now, 102.69 on the index. Metals today down very small, nothing much in metals either. Gold down $4, $2,010.60 per ounce. Silver down 23 cents today to $23.91. That's disappointing because, now we're breaking 24 again. Just a little bit ago it was over 26. So I'd like to see a little bounce here in silver, hoping you're going to find a bottom soon there. Oil down small today, down 75 cents per barrel. $70.12 for a barrel of West Texas Intermediate, still right in that 70 to 75 trough where it seems to be most comfortable. Bitcoin today down $437, 26,437 on Bitcoin. I think there hasn't been anything to drive Bitcoin to the upside, especially on these blah market days. But I still think Bitcoin, from what I've been reading, a chance for a little bit more of a rally before it's finished. Okay, so let's look at news today. The big news of the day. The University of Michigan Consumer Sentiment Survey basically crashed today, okay? Last month had a horrible reading at 63.5. In consumers, showing consumer sentiment really falling, very negative. The forecast this month was for 63, so a drop of about a half a point on the index, just showing that consumers still feeling pretty negative. Instead, it comes in at 57.7. So a big miss they just whiffed, and the sentiment much, much worse than they thought it was going to be. Inflation expectations on the survey through the roof. Consumers feeling like not only is inflation not beat, but really feeling like it's going to go up. And there's obviously the skepticism about the inflation numbers that are being reported as well. So inflation expectations up, but everything else down. Expectations for the economy, expectations for their own outlook, their own finances, just consumers feeling very, very, very negative. The consumers fear recession. They got the big topic, government default. I can't believe these yo-yo politicians we got in Washington can't get their heads out of their own asses to just get this debt ceiling thing done and end the conversation on it, man. You need leverage for your position. That's one thing. Go, use the leverage. That's what politics is. But you can't hold the entire economy here in the country and around the world hostage to try to get your way politically, no matter which team you're on. You can't refuse to negotiate if you're on one team. You can't insist on having it your way or the highway on the other team. It's just silliness. But the interesting thing was the report. Economists shocked by the report, calling the report in their language dismal. Okay, so consumers really feeling negative. This is really, we've talked about this a little bit on the show, and I've told you what I'm feeling like. We're probably going to get a dose of stagflation, which is probably what the truth of this report is showing, is a lot of consumers feeling the same way I am about where things are going to go. You're going to get the worst of everything, guys. Okay, so you're going to have high inflation, which it still is, and such a drag. The prices of everything are so astounding. I mean, everything, even a notary. Jake, my assistant, had to get some documents notarized yesterday. The best deal he could find to get a few pages notarized was $50. I mean, everything's through the roof. So high inflation, crappy economy, rising unemployment, high interest rates for borrowers, stagnant wage gains, falling sales and earnings for corporations. The sentiment will probably only get worse from here as some of this stuff really sets in. Unhappy times coming, guys. When you have a giant credit binge like we've had, when that goes away, when the bubble bursts or the times change or whatever kind of phrasing you want to use for that happens, well, it's usually very, very painful. And we're about to get a really good feel for what that kind of pain is like. The good news is, though, for savers, the world's going to turn around for people who save. It's not going to be discouraged so much as it has been. I think the government might actually even encourage savings, even though the way they've set up our economy, they need consumers constantly broke and hustling to keep our economy going. Fascinating survey today, and that really was what drove the market, even though the market discounting a lot of it. A lot of talk today about the Fed, what's coming next. Will there be I think that the sentiment right now certainly seems to be for a pause for the June meeting. And even in July meeting, really, traders in the bond market talking cuts as soon as this summer into the rates. I don't know if they're going to get that done, especially with inflation being sticky high. Although I got to say that producer price number we got yesterday certainly jolted me and the market too, because it was just so out of the normal. When you got everything else that's been coming down a little here, okay, we're down from 5.3 to 4.9 kind of thing. And when you see the producer price crater down to 2.2 or 2.3, whatever it came in at, that was a pretty big surprise. But I still don't think the Fed's job as far as getting rid of inflation is finished yet. I'll believe it we'll know it when we see it. And prices start to stabilize. Prices even coming down for some of the extravagant stuff. I don't know if we're ever going to see services, which have been going up like crazy, come back down. But heck yeah, man, get used to it, guys. More and more money spending for the same stuff or less. Interesting stuff I was reading today. Investors just flying out of U.S. equity funds, mutual funds, and ETFs that are invested in U.S. equities. Investors pulled $5.7 billion out of those funds just this week. It's the 7th consecutive week of big outflows from U.S. equity funds. Interestingly, this week, money markets rose by 10.4 billion. So investors parking their money on the sidelines, happy to see higher yields on these money markets. Safe money earning a little bit, instead of 0.4, they're actually getting 4%. Gigantic inflows into the safe havens, big outflows from the stuff, anything deemed even remotely risky. It seems like, everything pointing to recession, everybody preparing for recession. I gotta say, I really feel like it's inevitable, it's going to happen, but the contrarian in me, the guy who's like, when everybody believes one thing, the opposite is usually true, right? What do they say on Wall Street? When the herd is all heading stampeding in one direction, it's usually toward the cliff. So it's going to be fascinating to see, now that the consensus is recession, how it actually plays out. And to wrap up the show, guys, I just wanted to talk a little bit about the title today. Just joking around. We want the show to be a success. We want to grow the show. We want to give you guys everything you want from the show. And I look around, obviously, at other people doing finance and talking about investing in finance and money and what are they doing. And the one thing I really noticed was a lot of these guys put these sensational headlines. I mean, every day is some doom scenario, some crisis, some red alert, some whatever scenario. I just don't know I understand you got to try to find as many ways as you can to get clicks on your show, But this show, I try to really not be one of those guys. The every day is doomsday guys. Every day is a crisis. The world is coming to an end. Everything as we know it is not going to be. I'm not one of those guys. And so anyway, I just wanted to make a little bit of a joke in the title to give you guys something to laugh at to finish the week up here, guys. This weekend's going to be a very good and happy weekend. I hope you guys enjoy the very best of it. It's Mother's Day. Give mom a call, give mom a kiss, send mom some flowers, take mom to brunch. Without our moms, guys, none of us are anything in this world. Make sure to take care of your moms. Enjoy the weekend. It should be a really happy one. Spring is in the air. The Kentucky Derby's over. Mother's Day's here. Summer right around the corner. Enjoy the weekend. Spend time with your families and the people you care about. Relax, because next week we'll be right back to it on wacky Wall Street and the wacky government and everything else that causes Wall Street to be wacky. Anyway, that's it for the day, guys. Have a great weekend. We'll be back on Monday to bring you guys the news you need. Until then, take care. Thanks.